Yeah, I mean, we've got some positive news that came out today. Obviously, the Walmart earnings that you guys were just talking about, that kind of negates some of the retail sale number that we saw last week, some of the negativity from that. So people are more positive on that. We've seen consumer confidence turn around. We had a bad number in December. That was positive for January, and we know that's correlated to consumption. And we've got positive news coming out of the China-U.S. trade war. So Trump tweeted over the weekend that there's a lot of progress going on there. I mean, we see that feed through. Look at industrials, right? Industrials are up, I think, 16% year to date. A lot of that probably having to do with the positive news there. So I think there's a lot of momentum moving forward. Continue with the jobs claims, the ISM number. So it gives us a little leeway here going into the end of this first quarter.
I mean, it is remarkable to see the ongoing resilience and strength, Vinay, in this market. We're now talking about an S&P just today. It looked like we were going to start weak, and now all sectors are higher except for healthcare. It's discretionary materials on top. The cyclicals continue to do well. What's primarily driving this optimism and the buy the dip mentality that we've seen come back?
I think the first thing to note is this is an unwind of the exaggerated move down in December, which happened in extremely illiquid conditions. Yes, we were hit with a lot of idiosyncratic bad news. The market would have been down in the best of times, but in December, markets are so illiquid that they fell, to the worst December since 31. So most of this is an unwind of what happened at the end of the year. And what that brings us to today is the fine balance that we have been, seeing between the lift that we get from valuation, which is still very supportive in the U.S. and, of course, outside the U.S., and the drag that is coming principally from idiosyncratic risks. Some of these idiosyncratic risks have, as the previous speaker just noted, have abated a little, but there are other risks, waiting down the pike. You mentioned potential auto tariffs, Japanese VAT hike later in the year, ECB leadership change, Italy in technical recession, and Europe, doing, basically growth being rather weak. And that's really what we've been trying to balance. And the balance of news shifts, a little bit to the better side. We get the sort of rally we're seeing today.
Rick, is the dollar strong today, or is it more a bit of a bounce back of some of the currencies like the pound and the Australian dollar that have been so weak of late?
Well, I think it's that. I also think there's some psychology involved in the dollar index movement today that gets connected back to China and the negotiations and this notion that one of the pillars of this agreement that our government and the Chinese are working on is stability with their currency and ours. And I think part of the desire to be long the dollar index is basically thoughts on how it will be and how it will react should we get a trade arrangement made and the lead up to that. I also do think that the euro currency, all the bad news is out there with regard to the euro. Now it's just going to be biding time and find out what policy changes or economic changes are ahead. So I think this is one of those points where a lull is going to not be beneficial, and I think the dollar could slip a little bit, but I think in the bigger picture, the dollar is very sound. I mean, let's consider global equities. It's not just the U.S. I mean, you look at the DAX, it's having a good year, but the problem with the DAX is that it's 17% below its highs, even though it's having a good year, whereas the Dow Jones Industrial Average right now where it sits is only about, 3.5% away from its highs. And I think that's an important dynamic to distinguish. Real quickly, interest rates around the globe are certainly getting pressured. Remember, we settled at 268 for 10s. We are lower. We have a lower yield, higher price than last year, and we didn't finish off last year all that well either.